Hi everyone, this is Ruturaj and welcome to our channel Joint. In today's video, we would be seeing some more concepts related to dividend, bonus, stock split, rights issue and offer for sale or OFS. So let's first start with dividend. What it is? Dividend. So say for example, the company earned a lot of profit and it wants to share with the shareholders or you. So for example, you have hold a Reliance shares and now Reliance has made a lot of profit. It wants to share that profit with you. So in that case, the company gives a dividend. Now the company announces dividend on face value. Remember, in the first lecture we talked about the face value, like when we computed how many shares that a company can have, I told you about the face value of a company. So say for example, company announces a 1000% dividend. So remember that this dividend is on the face value, not on the actual stock price. Say for example, Reliance share price is 2000 but its face value is say 10 rupees. So this 1000% is on this face value and not on the current LTP or last traded price. So 1000% of this 10 rupees you would get as dividend. So for example, in this case, the dividend that you would be getting is 1000% of this one. So it would be 1000 divided by 100 multiplied by 10, which is equal to 100 rupees. So you would get 100 rupees dividend per share. Now, in case of dividend, you must also know one more thing: ex dividend date. This is very important. Ex means excluded. So say for example that the ex dividend date is, say for example, this is 8th of July 2021. So you must purchase the Reliance shares before it. So if you want the dividend, then you must purchase the shares on 7th July 2021. Bought, say for example, you bought Reliance shares. You bought Reliance shares. This is fine. So if you have purchased before it, say for example, you purchased on 5th of July, this is also fine. But if you want to purchase it on 8th of July, this is not acceptable because the ex dividend date is 8th of July. So you must purchase the Reliance shares before it. So you can purchase it on 7th of July. And there is a record date. Generally, record date is 2 days ahead of this ex dividend date. So for example, this is 8th of July and so record date might be on 10th of July. Assuming that 9th and 10th both are working days. So you don't need to understand this record date. Simply means a record date means that on this date you must have the shares in your Demat account. So if you have purchased the shares on 7th by T+2 settlement on this date 10th of July, your shares would be in your Demat account. So you should remember that this ex dividend date, this is mentioned in the dividend section. I will be showing you in the next demonstration video where to see this. So your shares must be in your account on the record date. So you can purchase it on 7th of July so that your share should be in your Demat account on this record date. So remember this, before ex dividend date you must buy the shares if you want to earn the dividend. And this dividend is directly credited to your savings bank account. It won't be going into your trading account, it will be directly credited into your savings account. Generally it takes around 15 days of time, you should remember it. Generally it takes 15 days of time after this record date. Now let's see bonus. So for example, the company declares a bonus of 1:2. This is the bonus ratio. What does that mean? So this means that for every share, for every one share, you would be getting 2 shares. In simple words, say for example, you have held say 10 Reliance shares, and Reliance declared a bonus ratio or bonus of 1:2. Then for 10 Reliance shares, you would be getting another 20 Reliance shares. Right, so in total you would be having 30 Reliance shares. So you don't have to no payment. So you don't have to pay anything extra here in case of bonus. The company would be directly giving you the bonus shares into your Demat account. So here also we have a ex bonus date. Similar to ex dividend date, just like I said that before the ex dividend date you should purchase the shares in order to be considered for the dividend. So similar way in here also, before the bonus date, this is excluded. So before the bonus date you should purchase the shares in order to avail this bonus issue. Now let's discuss about stock split. So say for example, the stock split ratio is 1:2. So what does that mean? The face value, initial face value was 10 and it is reduced by 2 times to 5. Now in this case the stock is splitted. What does that mean? Say for example, you have one Reliance share that is of value 2000. So it would be split into 2 shares. The value is around 1000, not to be exactly 1000, but it would be around 1000. Now you would be having 2 shares. Here you had 1 share and now you had 2 shares. So this has like you won't get any benefit out of it, but you should know about it because many times the stock is splitted and the price immediately reduces from 2000 to 1000. So don't think that the market has fallen, because it is just a normal split or a normal division. So the actual share price still remains the same. So don't worry about it that if the price falls suddenly, don't think that the market has crashed for that share or something. It is a normal split. Now let's see rights issue. So say for example, rights issue. So say for example, the rights issue is say for example 7:3. So what does this mean? This is the ratio. So what does this say is that for every 7 shares you would get 3 shares, but you have to pay for it. Compare it with the bonus thing. In bonus we had 1:2 ratio. So for every share you are getting 2 shares, but these two shares were absolutely free, no payment, right? but here in rights issue you have to pay for it. So for example, you have held, say for example, 7 Reliance shares. Now you can buy 3 Reliance shares at a price, say for example, current Reliance price was 2000, but in rights issue the company offers a lower price, say for example around 800. So now you can buy Reliance shares, 3 Reliance shares at 800 rupees if you have 7 Reliance shares. And exactly the same concept here also, there would be a X rights issue date, and similar to our dividend concept, and also we saw in X bonus date. So you have to hold the shares before this date, or you have to buy these shares just before this date to have this rights issue offer. But remember that you have to pay for it, pay exactly this amount to avail this rights issue. So now there are 2 ways actually here. You can like trade also in these 3 shares. So like you had 7 shares before the X rights issue date. Now you are eligible for these 3 shares, right? Now in the say for example, the date is X rights issue date is, say for example, 8th of July 2021. So say for example, rights issue was announced sometime before, say for example 2nd July it was announced. Now in this period from 2nd July to 7th July you can actually trade these 3 shares. Now you would be eligible to get these 3 shares. So either you can accept it or you can trade it so that someone else accept this 3 shares. So trading is also available for this rights issue option. I know it might be a bit confusing now, but when you see this is very simple. So once the rights issue is open, then automatically in your holding section your these 3 shares should be available, and you can trade this at around 800 or 900. You can sell it to someone else also. So either you can accept it or you can sell it to someone else. You can trade this. So trading is allowed just before the rights issue date. Now in the end we would see this OFS, or this is also known as offer for sale. So what does it mean? So it simply means, so remember that the promoters can hold maximum 75% of the shares in a company. Now if they want to sell these 75% share in the open market, they can sell it through this OFS or offer for sale. So remember this, like if you get any company's offer for sale, then it means that the company's owners or the promoters are reducing their shares from maybe 75%, or they might be having 70%, anything, they are reducing their shares in the open market. So this is known as offer for sale. Yes, and they would be offering a fixed price for it. Say for example in Reliance case they might be offering 1800 rupees or so. You can also avail this. You will be getting a direct mail from the company if you are holding the Reliance shares. So I think this is a very complicated lecture for now, but yes, if you are not confused, then please go through the video again, and in the next video we will be seeing some more concepts. Till then, thank you, take care, bye bye.